brokers, we have Melinda Wilner, Chief Operating Officer at United Wholesale Mortgage, number one wholesale lender in the country, number two overall lender in the country. Melinda's joining us in the middle of some big changes. As we all know, everybody's been sharing their feedback on some of these pending changes. Some of these things are as fresh as Monday. But we're going to get right into it. Melinda, how's everybody holding up at UWM?
Everybody's doing a fantastic job, actually, from going from a culture of not very much work from home to 98%, 99% of people working from home has been a big change. But I have been so pleased with the results. So from a technology standpoint, not worried at all. Our service levels have been fantastic still. So I think we have the benefit. We change so much that any change that comes, we're like, this thing out too. So it's been really, really successfthink Thank you.
That's great. Is that your home office there?
No, I am in the office.
All right.
I think I'd go crazy watching my two boys play games all day since they haven't seen them from school. So I'm better off here. It's better for everybody.
Good. So we're going to get started. The big news to start the week on the underwriting front, Fannie Mae and Freddie Mac came out with some changes to both purchase and refinance transactions. We did an interview with Scott Rose from Class Valuation on Monday, and he kind of highlighted those changes, but had left a caveat that it really depends upon what direction they get from the lender. So here you are today. What direction are you giving the AMCs on these things?
So really excited for these times. It's stressful for everybody. There's a lot of changes. It's nice to see everybody stepping up from FHFA, from Freddie, Fannie. Everybody's trying to do something to keep the industry still moving forward. I think the appraisal part is actually one of my favorite parts of this. So great things there. We are, as UWM, adopting all of the appraisal things that are in there. It gives us some on purchases. We have a couple alternative choices, which are great. So nobody needs to go in the home. On refis, if it's Fannie to Fannie or Freddie to Freddie, there's an accommodation there as well. Cash outs, we're a little out of the water on that much that we can do there. But that was a really, really great change, and we're excited about it. The other part that's even most exciting is we all love appraisal waivers, property inspection waivers, ACEs. So we've seen the commitment from Freddie that actually effective on the 29th, which I think is this weekend. They're actually expanding their box of waivers right off the bat, and it goes for pipeline loans as well. And then Fannie has also said that theirs is coming. No date. Don't really know what it will expand to, but it's really great that they're making these changes to help the mortgage market adjust to just a different way of doing things. So that was a really great change for us.
Now, when it comes to the either a drive-by or the ability to do a desktop, at what point is that decision being made? Is that going to be automated at the time of registration?
So that's a really, really great question, and something that will not be in the findings right away. Obviously, if the box of waivers expand, we'll see that in the findings. But as far as like, hey, you are welcome to get a desktop appraisal or a drive-by appraisal on this, we will not see that in findings. Just got off a call with Fannie. I think that's in the cards in the next couple of weeks. They're going to try and do that. But for now, we need to be really, really careful. So all of our brokers out there, please use the lookup tool. So we'll have the lookup tool on our site. It'll be in anything that we publish. It's on there already to make sure that on a refi, you're making sure that's either Fannie to Fannie or Freddie to Freddie, and that you're picking the right AUS. Because if you pick the wrong one and then get the reduced appraisal, then we're in trouble. We're either flipping it or whatever. So we also have to be super conscious of when you have a reduced appraisal product, not to flip the loan, right? To make sure that nothing else comes where, hey, LPA won't take it, so flip it to DU. Bad part is, hey, your loosened appraisal won't work there anymore. So it'll be a little bit tough, and we have to be super diligent to make sure that we're ordering it the right way, because the findings for now are not going to guide us in that right direction. So purchases, it's a little bit easier because there's no Freddie to Freddie, Fannie to Fannie component in there. So those will be pretty simple, but it'll be very, very important for everybody to know which product to order, so then you don't have to reverse and get the more extreme product after, if anything does change.
Got it. So that's extremely helpful. So I mean, basically for brokers, when they're running through their process, it's they're checking to see if it's currently a Fannie or Freddie loan. And then from there, until there's automation behind the scenes on the DU side or the LP side, they, are basically making the business decision to, check to see if that market, if this is applicable.
Yeah.
Meaning it's Fannie and Fannie.
Yeah.
Got it.
Running the right AUS to make sure. But that's also not going to clarify that it's Fannie to Fannie or Freddie to Freddie. So that lookup tool is going to be really, really critical. And then our underwriters will do the job of checking and making sure that we don't flip AUSs later for a different reason and validate it. So we just need to be super careful. But hopefully they'll work towards better technology. I mean, hopefully this whole thing is a little bit shorter term. But if it's not, and this continues for a little while, hopefully the Freddies and Fannies of the world will continue to make it a little bit easier for us technology-wise.
What is the current PIW ratio?
Oh, it's about, I would say about 20 to 25%.
Okay.
A little bit tighter, so that's not necessarily an active for sure, but last time I looked, which was a little bit ago, but there has been some tightening to it actually for a while, so it will be interesting, and I'm excited to watch if it actually does expand. So Freddie was very upfront with theirs. They said, hey, these LTVs are going to expand, so it's pretty clear, but it'll be nice to see what it actually does to it, especially as some of the industry news, I think they kind of peeled away the waivers a little bit.
Yeah.
So it's really a giant step for them to be able to come back and do more waivers, because we all love those. It's the best of everything.
That's the best of all worlds.
There's not that uncertainty of, oh my gosh, is it going to praise the right way? So that's actually probably the glimmering light in all of this is help with those appraisals. So
absolutely. So now I'm going to get into the fun question, which I could tell you that the broker world not broker world, it's really loan originators. Everybody's sort of kind of on pins and needles when it comes to VOEs, and as they should be. Tomorrow, jobless claims are expected to come out, and I read a report this morning. It could be anywhere from 1.8 million to 4 million for the first week. So I mean, in the biggest week of job losses during the financial crisis, we never saw a month with more than 700,000. So we're talking about 1 week that will have more than we ever had in a quarter before. So it's a really big number, and obviously lenders have a lot of risk. You want to walk us through what changes you guys are making when it comes to verifications of employment?
Yeah, definitely. That's probably the toughest part of what this is going to cause is the unemployment. So I know I've had, friends or family members who are already on reduced income or cutting of hours or laying off either with or without pay or with temporary pay. So it is a real thing. Even looking at our own verbals that we're doing right now, it's much more common for job loss right now. But those unemployment numbers, those don't lie. And I think we had what's expected to be our record week of all time last week. Those numbers aren't in yet, but yeah, the estimates that I heard are either from 2.5 as high as 4 million. That's just for last week.
That was the first week. I mean, the numbers that I'm hearing, I mean, the Fed chief in St. Louis, James Bullard, he said yesterday that, again, this is assuming that everything goes the way it's been going, we could see unemployment go to 1 out of every 4 Americans. So, I mean, that would be a massive increase. And obviously that's why we're seeing some of the pullbacks that we're seeing.
Yeah, definitely. And, I don't doubt that number at all. I mean, even looking in the local community, how many bars, how many restaurants, how many, anything of the travel industry, like there's so much going on. So that is the toughest part. And, for us, it's important as a whole broker channel, us as a lender, that we're watching for those defaults, because that will be the thing that will hurt us the most. So it's we're taking steps. Everybody's taking steps to make sure that borrowers are still employed at the level of pay that they were before. So that's where we're going to definitely see some tightening. So you asked a question, what is UWM doing specifically? And just to clarify, something I want to put out there too is Fannie and Freddie did come out with some guidance, right, on verbal verification and saying, hey, you can also use these things to meet the guideline. What a lot of people don't realize is that 2 things, like we as lenders represent and warrant that loan is good and the borrower is employed, all those great things. But there's also a misrep misrepresentation factor there too,
Yep.
right? So at the closing, the way that Fannie and Freddie look at this, they look at it from a misrep standpoint, and they say, hey, they signed that 1003 at closing. They signed that I am employed there. They signed that I make that much money. They signed that I have these debts and all of the other declarations. And I think, unfortunately, people sometimes don't read, or title agents don't help point out all that fine print right before the borrower's signature on the third page is them saying, hey, it's all true and accurate. So I think just the way that the form is, like, sometimes I hope it's not so often that it's intentional, but I think a lot of it is like, we see a lot of people get car payments in the middle of a mortgage also. So there's the misrep factor. So truly, that loan that ended up closing with the borrower who lost their job before note date, it's misrepresentation. I wouldn't quite use the word fraud because they have a bigger definition of that, but it kind of is. Like, from the borrower standpoint, they did commit fraud on that loan by continuing with it. So that's where the GSEs are like, hey, it's a bad loan. Whatever it takes, you're gonna buy it back from us.
Yeah. So let's if you don't mind, I just want to dig into that, because one of the big discussion points that I actually think it's been one of the healthiest things that's come out of this whole crisis is we've been able to have conversations just with the broker community, with leaders from capital markets and risk and operations about the liability and the exposure that lenders do have during these times. We've really focused on capital markets up to this point, but I think this conversation is really important, because I've had a couple brokers actually send me screenshots of situations where they'll say, hey, Anthony, I have this loan that's clear to close for tomorrow, and my borrower is not there. He's been laid off, and I know that. What should I do? And I'm unfortunately, for the broker community, I'm going to tell you, I'm taking my loan officer broker hat off, and I'm going to do, I'm kind of putting on the hat of saying, hey, we really have to focus on everybody staying in business and doing what's right by our partners, and partnership is a two-way street. So in this case, I've been telling brokers how important it was to report it. Now, that issue now becomes much bigger in light of the current situation, because right now, if you do get one of those loans with a defect or misrepresentation, and you have to buy that loan back, what are the implications for not just you, but any lender?
So a lot of them, I mean, obviously the borrower, him or herself, right? We put them in something that they couldn't afford. I can't imagine how difficult foreclosure and leaving a home might be. That's certainly the worst case scenario. As far as, I mean, you said it well. It's like, hey, we have to protect each other here. We have to protect the lenders. We have to protect the entire wholesale channel. Like, we can't put these loans into the system like that. So just like you said, it's like, hey, you know what? We are going to lose some loans. Okay. Like, no question, people will lose their jobs. And I think a lot of it is like, just as a loan officer, and I originated for years, and I wasn't good enough at doing this back then, but in this climate, it's so critical to make sure that we're having constant conversations with the borrowers. We know this stuff is happening. This isn't a, hey, what happens doomsday come what may. We know, we see the unemployment numbers. We watch it happening to our friends and family. We watch our communities, businesses shutting down. We're watching all those things. And we really need to protect the mortgage industry, to protect the wholesale channel from a bunch of bad loans where people can't pay them. That's really as far as a lender, what does that mean? Yeah, we'll get a lot of repurchases back from the GSEs. Those are hard to sell, especially when they're delinquent, they don't pay. So it just hurts everybody. So the difference that I think we need to take now is like being so proactive. Like, hey, borrower, I know there's a lot going on in the community. I know, the virus is going around. Like, keep me updated. How is it impacting your family? How is it impacting your job? Hey, just checking in on you. Is everything still okay with your employment? How is your company doing? Is it still healthy? Is it still strong? Hey, at CTC time, I'm going to call that borrower and set up that closing. Hey, is everything still okay? Income standpoint, you're still employed. Your husband's still employed. Hours are still great. Yep. How's the company doing? Asking those questions. And even at the closing table, even at the note date, even right after, like, all of those are so critical. And, again, I didn't do that back when I was originating, right? You made the assumption and it was fine. It was a fine assumption because people weren't losing jobs minute by minute, but now we're just in such a different thing. So do the right thing. And again, I don't think, and we're brokers. Hey, we try and do the right thing all the time. I don't think it's intentional, but this time we need to just think about it a little bit differently. We have to be proactive with it. We can't just be like, sit back and be neutral about it. We have to be proactive. And are you going going to lose some loans? Absolutely. Are you going to save a borrower from foreclosure at some point in this new loan? Absolutely. Will it be a red mark? I'm not sure how other lenders treat things like this, but hey, if it comes out that it was a known thing that the broker knew and couldn't, like, that's where there's going to be a problem. But again, I think a lot of it is not intentional. I mean, we're brokers, we do the right thing. It's our industry, we take great care of it. So I think we just need to all think a little bit differently and be more proactive with it, just like we are. And I mean, there's nothing we care about more than a super smooth mortgage process and a mortgage closing. But these are just different times, so we are going to be extra diligent in so many things about income and employment, but we all need to join as a team to do it together. So even if it means a couple less loans this month, guess what? When the virus is gone, whether that's 2 weeks, 4 weeks, hopefully not more than a few months there, business will come back. Like we'll get the finances. Rates are likely going to stay low because we got to stimulate the economy again. There's going to be an inventory of houses because people are like holding, they're not moving at this moment. So, hey, if you don't get it now, do the right thing, ask the questions. If you lose the loan now, it's okay, because that loan is going to come back to you in a few months and you're doing right by the borrower, you're doing right by the wholesale channel and the lender.
Yeah, I think 2 points I would just want to share with our fellow brokers is just the number one thing would be understanding that we are still unfortunately working on shedding some reputation, a lot of reputation damage from the financial crisis, and the culture before the financial crisis, as somebody that was in that and part of that culture, was get every deal done, close every loan. The entire industry was stated income, no income, so it was everybody was in on that.
Yeah.
Right now, the broker community has rebuilt its reputation over the last several years, and I think this is going to be one of those really big opportunities, and the opportunity is going to be able to kind of right the wrongs of yesterday. And again, it may mean we lose market share. It honestly, I've had this conversation with leaders of lenders, like brokers may lose ground in the market share game. But I'm okay with that, because at the end of the day, the most important thing for all of us is having lenders at the end of this crisis. And anybody that was in the market as a broker before the crisis knows that from 2008 to 2011, there was the initial, all the lenders went out of business, but even after that, a couple of years later, Wells Fargo left the market. I mean, lenders abandoned the wholesale market because it was very clear. It wasn't that they couldn't make money. It was they didn't trust brokers. And that's the reason why banks haven't come back. And I think right now is a huge opportunity, because all the lenders I talk to, the non-bank lenders, obviously, they're all in the same boat. They're coming to me and saying, Anthony, like, this could be a huge problem for us. We are going to do our best to verify employment. But, at the end of the day, nobody's going to know better than the broker. When a loan originator works for a lender, they have an obligation, because that's their employer, to report, hey, I know that Johnny lost his job and this is going to be an issue for me. As a broker, you don't have that same, they're not necessarily paying your paycheck every week. But I think at this point, we have to look out for them, because lenders will go out of business if there's a wave of defaults here. And it's really, really important that we do our part in preventing that. So just to finish up on the VOE side. So one day we're going to do a final VOE. The change is going to be within 24 hours of closing, the same day of closing.
Right now, we'll probably start day before, day of, but our hope is to get to day of closing, and we will have some accommodations there. So I will take advantage of one of Fannie and Freddie's ideas on accepting an email, as long as we can tie it back, because I know that it's going to create some issues. But again, like, hey, you guys, you said it perfectly. It's like, brokers, we're relationship builders, right? We're in the communities, we take care of people. That's what we do. Sometimes when I was originating, I felt like these people were my family by the time we were done with the process, and I want to take great care of them. I know that as a broker, as a great loan officer, you stay in a lot of contact with them and build that relationship and really be that support to them and get them through this. But so yes, we'll be looking for one day. We will try and do our best to take emails that, hey, they're still employed, coming from the employer, just to try and speed up the process and make it a little bit better. In rescissions, it will be same day or during that rescission period, we'll be doing it. But the most important thing, again, is just the broker and the originator, the processor, having those conversations. Don't let the loan go to closing. Okay.
Don't waste everybody's time.
don't wait for the surprise. Like in a perfect world, I'm not going to find any when I do it, the day of closing, because our brokers have done a great job of taking care of it already. And we know, and day by day, like minute by minute, I think people are, things are changing and people are losing their jobs. So yes, we'll be looking to do day of or day before for now.
So for me, hearing that day of, day before, that's a flashing red sign that says, guys, we have to do everything in our power to coordinate with our customers and their employers, and whatever the best practices are, to make sure that when they call, it's there's somebody there to respond. We're calling the right number. It's extremely important that more effort's being made there, because when I think of 24 hours before closing, and I know the volume that UWM does on a daily basis, that can get really, really congested. And I think everybody should just, think about how within their operation, with their processors, are doing the due diligence to prevent any delays for themselves.
That's right. And having then, we're trying to, we always do a verification as close to approved with conditions as we can. We do that first one to make sure we can get a hold of them, see what the process is. We know that the second one we verify will be quicker, but we're going to start setting up employers for success there too, saying, hey, we're going to call back and it's going to be kind of urgent because it's going to be day of and it might hold up things. So is there an email address we can contact you at? What's the best number? If you're working from home, what's the best way to get a hold of you? So if our brokers can do that also and prepare the borrowers to prepare their employers, it will make this thing go much, much more smoothly. And I hope that everybody's on board and understanding. Again, as UWM, we try and interrupt the process as little as possible. We get thrown things all the time as a lender, as a mortgage industry. Like in a way, like, hey, we do change all the time. We're used to so much forced change as mortgages that we're used to things happening like this to us. So we just got to amend and go on and change our ways a little bit, and we'll get through it together, and we'll come out great and clean on the other side.
And for companies that are shut down, but the employee is still an active employee, you guys, like Fannie Mae's guidance on alternative verification of employment emails.
Yeah. So what we're really after is are they still employed and getting paid?
Yep.
Their reduction in hours. That's it. And if somebody is on now unpaid leave or not getting paid, or now their hours are down to a point where when we requalify them, they don't qualify for the mortgage, that's what we're after.
Got it.
More due diligence on self-employed also. Hey, looking at what type of business are they in, and making sure that, hey, when we call and they say we're closed until April or May, I've got a problem there, right? Like, I know that their income is not going to be the same next year as it is this year. So, or last year, I should say. So, those are the things that we'll have to be more scrutinous about. But again, like, hey, if we're doing a great job as originators and brokers, then we shouldn't have very many surprises to this at all. So, stay in great contact with your borrowers. We're in this together. We will get past it, I promise you. And I'm not trying to make the process difficult. We do a great job when things are thrown at us to try and figure out how to not interrupt the process at all. Like, I think of TRID days, and like, hey, we shaved off a day. We didn't go out 6 days. So always our commitment that we'll try and make it as easy as possible. But most importantly, that we're sustaining the channel, that we're sustaining as a company. We're doing the right thing for 5 years from now, 5 months from now, and not just 5 days from now.
Absolutely. And I think expectations and transparency is really important. So everybody hearing this is really important. This takes me into a question that came up from one of our brokers, Jamie Kavanaugh, payment default risk based upon job losses. So, let's forget the pending borrowers.
Yep.
Let's just look at the borrowers that closed in February, in January, and December. What is, how are you guys evaluating that risk? Because obviously, people are definitely losing jobs.
Yeah, it's substantial. We do expect, you can't not expect it from looking at the numbers, that the delinquencies will increase. We're seeing a lot about it in the industry, about advancing payments and what it means in a much broader way to the entire, even the U.S. economy, taking it to that level. But as far as I think it's great that they came out with forbearance things for it. Tell me if this is where you're getting at too, is what does it mean? So is there going to be more defaults? Yes. Is it going to put a strain on everybody? Yes. Because of some of the things from a servicing standpoint, it's going to put tons of pressure on the entire industry, but on the entire economy too, to keep that stuff going if borrowers don't make those payments. So whether it's forbearance or past due. So I think, what I expect to see is not as much, delinquency per se, more in the forbearance category, which it's come out. Fannie and Freddie has come out and said, hey, if you can, verify that you've been hard hit by the virus, we'll put you on a forbearance plan. Now, what we don't know is, we think back to 2008. Can I promise you that it's not going to be a red mark one day? That it's not going to impact their ability in a future date to get a mortgage? No, I can't, because I don't think there's been a time, and this is my 20th year in mortgages. I originated for the great majority of it. I don't think I've seen a time where there wasn't something negative like that didn't impact it, right? So if you think during the crisis, it's like, hey, do a short sale, strategic default, like all those things.
Yeah.
What else was there? Deed in lieu. It all sounded great at that time. And the most important part is, like, you are helping that borrower get through that time. But I would say use great caution, because I have a hard time thinking that there's going to be zero impact from that. Obviously, take care of the borrower, make sure that we're doing the right thing. If they are struck by the virus, absolutely, like, get on a forbearance plan. But I think we should be very careful to consult instead of, I've had people come to me and say, like, oh, I can just quit making my mortgage payment for 60 days. I'm like, no, absolutely not. Don't do it unless you have to. And you can't do it unless you have to. But it shouldn't be like, as an industry, I don't know, again, we want to take care of people, but it shouldn't be like, oh yeah, go ahead and do forbearance. Like,
yeah, no, I can't agree with you more. Matter of fact, that was my single biggest concern when I start to hear the forbearance conversation is, after the housing crisis, it was like the default answer by everybody is just stop making your payments. And listen, that was a different animal.
Yeah.
But right now, I think one of the things that's important is there's going to be people that just they are living paycheck to paycheck and they can't make their payments. 100% applicable. You're not instructing them. I think right now what AIME is trying to do is we're working with servicers. We actually have a call with Courtney Thompson from Flagstar servicing platform today, and we're talking to them and other services about when somebody is in this situation, where do I direct them? We're not going to become the forbearance expert. We're just simply, we have to know where to send them and provide some direction and instruction. But for the most part, if you have a consumer that is impacted, but at the same time is financially stable, can make their payments, we don't want anybody missing payments. That's just, same thing with your car payments or your credit cards. There's no contract that anybody signs where they go into it with the expectation that they're going to, stop making payments at some point. This is a big issue, and some people are going to be applicable, but I think what we really need to focus on is preventing abuses, because it's easy for people to say, hey, I'm going to stop making my payments. But what we learned in the financial crisis and in Hurricane Katrina is that once people stop making their payments, the likelihood they're going to start making it is very low. And that's not good for our communities. That's not good for home values. That's not good for the consumer themselves, because it's a habit and a behavioral change they have to overcome. And I think for the most part, our group's already been talking about this and very vocal about making sure that that's like the last resort. The next question to build off that, which was actually Jamie's question, is brokers. What is the broker's risk or liability if a consumer closed on a loan in February, they had a job, VOE showed they had a job, no defects, no fraud, everything was represented properly. March comes, they lose their job. April comes, they miss their mortgage payment. As a broker, early payment default, like how does that impact them?
So we audit. Actually, most lenders audit any early payment defaults there. And I don't actually. It's a question we have out for Fannie and Freddie on how forbearance will be created. Like I don't think it's a default, because it's actually not. It doesn't show up as late on your credit report or anything. But we audit those loans, and for us, it's most important that, hey, was there misrepresentation on it? Again, we hit on this a little bit ago. Was there misrep on it? Yes or no? that will make a big determination between the two. But I mean, we do look at, just like any natural disaster when it hits, like we do know that we will see more delinquencies in certain areas. So we do look at delinquencies at the broker level all the time, every month. It's a active monitoring that we do. But for us, like, we're not going to come back if everything was done correctly on it. I can't speak for all lenders and how they handle it, but assuming there was no obvious misrepresentation or fraud, then that's the risk that we take as the lender. That's what we do for the time period. We have the loans, are making the payments. If they stop making the payments, that's on us. Now, again, like you said, if there's something wrong with the mortgage, or we didn't disclose something, or there was borrower misrep, different story. But
yeah, so in this scenario,
do that.
Yeah. But in the scenario you gave earlier, where somebody lost their job, went to closing, signed a 1003 that said that they had a job when in fact they got laid off the week before, that would be misrep. Now there's liability and there's an issue. In this scenario, everything's legit. They close, they lose their job in 3 weeks. Then there should be no exposure to the broker. Virtual closings. This has been, obviously, this time everybody's sort of trying to go down that road. There seems to be 2 major issues. One is title companies that support it. 2 is title companies that can support at any level of scale. And then 3, lenders' capacity to support it. I know UWM has e-closing. Where do you stand on that? Is that being utilized? Is the capacity there to support this at scale?
Yeah, so we're actually we're clearly seeing an influx in volume with virtual e-close. So this is it's in about 30 states and DC across. We've been doing it for, oh goodness, probably going on maybe 2 years now.
Yeah, I think so.
And the experience is fantastic. So just like borrowers, brokers love our upfront ease doc signing. It's simple, right? You do it all on your phone, you're done. Virtual e-close is very similar. So the bar, it's like a FaceTime. It's like you've got the docs there, you've got the notary down here, and you're kind of doing a FaceTime with the notary while you're e-signing your doc. So it's really a fantastic thing. I mean, we all know that we're seeing, hey, borrowers don't want a title agent in their house. The title agencies are closed. They can't go. So it's really kind of like the appraisals are really, really great solution. Bad part, again, is, hey, it's in 30 states and not all 50. That's just due to state law and allowing it. But essentially, it's a notary. Sometimes they're in the resident state. Most often they might be in Virginia, but they're doing that FaceTime with the borrower. And what a great, I mean, it's fantastic. Not even for these times, but even not in these times, to just sit and like sign your docs on your phone and be finished, instead of going to the title company, driving there, getting that big stack of papers, just not in the comfort of your own home, sitting with strangers. It's really fantastic. So we've actually seen a big uptick in it since this is happening. It's a great solution. So anybody, if you're not familiar with it, check with your AE and see, hey, is it in my state? How does it work? And I think we have some great videos on how it works. So it's a really great thing to do. There is what we're working on right now, as kind of like Fannie and Freddie and FHFA, like everybody's hard at work on, gosh, how do we keep moving this industry forward? We're looking to expand the title insurers. So we have currently one insurer who does all of our 30 or 31 states with us. We're looking to bring on, like, not all the other insurers will do all those states, but they might do some of those states. So trying to find some flexibility with all of the main title insurance companies to be able to do this with them as well. So for now, we've got one partner that we've had. So in the instance that this will help your business and help things still continue on to use, then we will direct you, hey, make sure that this insurer is used. Different agents we know use different insurers, so we just have to make sure that this one insurer is behind it, and then we can proceed with it. So we're looking to bring on more title insurance companies so that everybody can use the title agents that they're comfortable with, but also improving the technology too. So we have just started a corporate technology project to make the technology even better, more seamless, make it quicker. Right now it takes a little bit of time to prep the doc, so there's a little bit of a delay. So we're looking to do it, like anything else UWM style, as instant as we possibly can. So that's a focus of ours in the next week or two.
Wow.
To get virtual e-closing to a completely different place to help push this thing forward.
So a question just on that is, how do we get a virtual e-close done in a wet state using one of our approved title companies if they are not located in our approved state?
So the approval process, let me just clarify that a little bit. The main thing that dictates is first state law. So some states openly say, hey, we are fine with remote notarization. Some states say we are not fine with remote notarization. And then, of course, the hard ones are the ones in the middle that don't state either way, which is then left up to interpretation by Fannie and Freddie. So we have, they each have a quantity of states that they can do through just that they're comfortable with, and then getting an insurer on board with it's really they're at the end of the day responsible for making sure that we've got first lien right. So that's why from a title company perspective, so there's like 3 layers. First, the state's got to be on board, Freddie, Fannie have to be on board, and then we have to have a title insurer that's also on board to do this.
Got it. That makes 100% sense. Just one question that I've missed on the VOE side. As far as Fannie, Freddie go, if a borrower's on unemployment, there's no guidance whatsoever from the GSEs that's acceptable. That's just that is.
So any job loss, any where they're not getting paid, there's nothing we can do. There's a little bit of stuff in the guidelines for temporary leave, but I think in this the situation that we're in, I don't know that many borrowers will be able to meet that. But no, if they're not employed and they're not, and I should clarify that because sometimes they say, yes, they're still employed with us, they're just not getting pay. We won't be able to.
Yeah, I think that's the common one that's come up is a lot of people have come to me and said, hey, well, the employers want to say that once, this is over, they'll hire them back. And unfortunately, that is, what we want to be able to say yes to, but unfortunately that's just not, it's not happening.
And again, hey, if it's not today, we'll do it again in a couple months when things ease back up again. So this is just temporary. You do the right thing today, it will all come back to you tomorrow. It always does.
As far as the next question I have for you is property tax certifications. There's a lot of tax offices and municipalities are closing. There's tax offices that are not online. I talked to a bunch of brokers about this issue. Has there been any thought into alternative verification? Whether it's going 110% of last year's property taxes, or anything there that there's flexibility around?
That's a good question. Can we go say, oops, we're just going to take a guess because the title company is closed or the county is closed? No, we can't do that. But we're always open to whatever reasonable documentation is out there. It's our job to make sure when we underwrite that we're getting loans if we can afford it. So obviously that tax payment is important that we actually get right. But I actually haven't heard that coming, bubbling up operationally yet. That, hey, I can't get a tax cert, but there are a lot of different ways that we use today. We do know the taxes. So if we need to get creative and we feel good with the documentation that's out there, that we'll always try and make that work.
Got it. And as far as, I guess we'll jump ahead here. Productivity levels, SLAs, since UWM has gone to work from home, it seems like from everything I'm seeing, obviously, at the volume and scale that you guys are at, there's always going to be underwriting things that come up and operational things that come up. But overall, from the feedback I'm seeing from the broker community, at least, I'm not seeing any issues at any level of real scale. I'm not saying that there isn't issues. It's just we're not seeing an overwhelming issue or anything specific. How has the transition been for the team since they've basically been working from home?
Really fantastic, actually. It's we're on same day conditions. I think we'll be on today, and next day underwrites for new. So we're doing fantastic. The teams have accommodated and adjusted really, really well to working from home. But our turn times are great. Brokers are great about using CR. It's sometimes working from home, sometimes connections are a little bit more difficult. So seeing a nice increase in CR usage, but from an SLA standpoint, we're doing great. From a service standpoint, still seeing tons of great NPS and kudos coming from our brokers, which is my sign that the underwriters are still doing a great job. But no hiccups at all. I mean, this was a very, very big month for us. We're finishing this month really strong, and as if we were all here in the office still. So we've really adjusted well, and super proud of that.
Well, that's amazing. So I guess the other thing would be, how big of an impact has client request had from an operational efficiency standpoint? Because I know that before that, I was getting a couple hundred messages per day, and I really don't get more than like a handful per day now. So it seems like it's cleared up a lot of operational issues.
It has, and it was we love consulting with our brokers for, hey, what frustrates you? What can we do better? So CR was very much birthed from broker feedback. Like, hey, UWM has groups that do different things, but it frustrates me to have to explain to Melinda, and then Melinda's got to say, go to Anthony. Then I have to explain my story to Anthony, and Anthony's like, hey, Susie can help you on this team. So we always got the job done, but the having to repeat the story was difficult. Like it's a time waster, right? So now what CR has enabled us to do is, like, we can see from that very first request, say, hey, what is it that the broker needed? And even from the operator game, which we all love, right? So if I have an underwriter come to me and say, hey, the broker's saying this, like, that's different than me hearing it in the broker's words sometimes too. So
Yep.
having to repeat the story is huge. The transparency of it all and seeing, everybody's feedback right in their why, it's really been fantastic. And I will do one plug for it right now, because I get this reaction from brokers a lot. They're like, I don't want to do a CR because I don't want to throw anyone under the bus. I'm like, it is not throwing under the bus. It is exactly the same as calling or emailing. Like, nobody gets in trouble. In fact, this is the preferred way to do it. Why? Because I can see everything that's happening. Like, I can jump in. You can tell us when you're not happy. Like, we will take great care of you using CR. So please use it just like it's anything else. It has nothing to do with, oh, my underwriter is going to get mad because I told on her that that this condition didn't clear how I wanted it to. So it's please, if that's what's in your head, dispel that myth immediately and continue to use it. But I think it's actually helped, even in the environment that we're in, to have things routed through the CR system as opposed to phone calls and, like, hey, it's a stressful time. We're all getting adjusted to what this thing looks like, but CRs have, I think, helped us a lot. So please go ahead and send them. We'll take great care of your CRs as they come in and get them done.
Somebody said Melinda is amazing. So as far as, I guess, the last one I want to hit on, because I think this is kind of, I will say one of the things that I personally get some enjoyment out of is we will have a post, and there could be really differing views about the same exact tool. So, for example, ecloses 2.0. A couple weeks ago, somebody posted about it. 2/3 of the audience, let's just say there was 400 people that commented on it. It was 2/3 were raving fans. 1/3 were not raving fans. They were whatever the opposite is. So, we got feedback from those people, and we started AIME, not UWM, but we just said, okay, these people have a pain point. We're going to create a training video. And we've been working with some of our top, broker owners and processors to build that. But, from your experience, what you're seeing at a high level, what are the things that are whether it's bad applications, little tactical things that end up causing disruption in the process, create a pain point later in the process, like anything that's redundant that you see a lot of?
Yeah. So anything that kind of delays the process overall.
Yeah, that you kind of see, with some frequency.
Yeah, no, great question. I'll answer it in, like, normal terms, and then in the world that we're living in right now terms too. So, I just are making sure when we're first doing that upload, hey, have that signed LE, that's date compliant and signed, have that 1003, choose your AUS, and get us income docs. Like, we don't actually ask for very much upfront, but it's a shocking number how many people don't get that one right. So right off the bat, just make sure that we're submitting the right things, and we're actually working on a project to make that stuff easier. But so that's up front. During the process, like, hey, get the hard stuff over with, like anything about income stuff, like, please get those to us as soon as possible. Let the senior underwriter review those things so that we don't have surprises later. I hate surprises. I hate surprises in mortgage. I like personals for, like, birthday surprises. Presents, not so cool, right?
Mortgage surprises are not fun. Yeah.
Not fun at all. So those are normal ones. Reading the AUS findings is huge. But let's talk right now. Reading the AUS findings is huge. We still have people who will submit an order appraisals when there's an appraisal waiver. So now, hey, we know we're going to see more of them. We know we need to see more of them. Please make sure that you're reviewing the findings and sending us what's in the findings. And then what we talked about earlier, like, just hey, we're working in a different time here. Be proactive. Like, you don't want the closing to blow up because we just found that the borrower has reduced wages now. be proactive. Ask the question ahead of time. We will get it re-underwritten before it gets to closing and before it's at the title company and all those things happen. So that's a really big one. Just be forthcoming with. We're going to find out anyway, right? We're going to find out that they're making less or that they're not there. Like, again, stay in contact with the borrowers. Ask them early so we can continue to move that loan through quickly without having to back up an entire step and take that thing out of closing and send that back to underwriting. So those would be my big ones for sure.
Anything related to VOE that you could recommend? I mean, whether it's putting a phone number in, is there anything specifically there that your VOE department identifies as a common delay or pain point?
That is a good question. We always have to do our own search for a phone number. Obviously, the one step that often gets skipped is I did the same thing when I originated too. Like, I don't put in the address. Like, the more info you can give us, we got to have it at some point anyway to be able to track down the employer is huge. So yeah, and again, we'll do a great job up front, but for now, with these kind of process changes that we're facing, just prepare borrowers for it. Prepare borrowers to go to the employer and say, hey, I'm refinancing. This is important to me. This is what's going to happen on this day. Will you please make sure that you answer quickly? Unfortunately, we have to get brokers and borrowers involved often because we're not getting, feedback back from the employer that everything is good. So the more proactive that we can be, the better to it all. One thing I want to circle back to that I just remembered, we talked earlier on the appraisal ordering process, and we're going to put something on our website actually to help differentiate which products are usable when too. I forgot to mention that earlier because I saw a lot of feedback in the column of like, let's order the right appraisal. So I wanted to throw that plug in there too. So
okay, so that is going to be added to the portal at some point soon.
Yeah.
Okay, great. Well, brokers, we got 45 minutes out of Melinda. Melinda, you've ran operations for a lender that's gone from 40 million to 100 million. Probably one of the biggest growth stories in the history of the mortgage industry. I'm sure Matt compliments you enough, but the broker community is very grateful for your hard work and all the hard work of all your team members and leaders. So we appreciate you guys. We know right now things are a little dicey with everybody working from home, but broker community certainly appreciates you guys. So thank you very much and keep up all the great work.
Thank you so much. And thank you for supporting us AIME-wise and broker-wise. And we're going to do great things together. I promise we're going to get through this together, and we're going to come out cleaner and stronger on the other side as well if we all work together on this. So thanks for the opportunity. We'll figure it out. We'll figure out how to do business in this new way. I equate it to like tent camping, just like you got to figure out how to survive in the wild for a little while. Same thing with this. Like, we just got to figure out how to survive in a new world that we're up against. But I know we will rise up and do it together, and we'll be fine. We're going to be just fine.
When we get through this, I can tell you that one thing that will never be an issue again is brokers are about to become the most efficient at VOEs ever. So when we get through this, I can just tell you right now, VOEs will never be an issue again. We're going to own this.
Right. Brokers, I need your help on this one. I promise I'll try to make it go smoothly, but yes, you're right.
Brokers are better at VOEs. All right, Melinda, thank you very much for your time. You have a wonderful day.
It was a pleasure. Thank you.